everyone, this is the 20th of November 2019 and I'm recording after what's been an up day in the market. The Nifty's taken out last week's high, but again we are still not at all-time high. So the near-term momentum has actually been coming to a halt, in the sense that when you look at the last several days of activity, you can at least find up to 10 doji patterns in just 2 weeks of trading. So every day, whether it opens with a gap up or gap down, it just stays there for the rest of the day. There are some zigzag movements during the day, but a doji is basically when you open and close more or less at the same price point that you open for the day, whatever the high low you may have made. So it opens and closes more or less in the same range, and this is happening repeatedly and usually gives you a sense of some kind of loss of momentum. Now, when you look at the Nifty standalone or the Bank Nifty, you may or may not feel that way, especially when you have up days. But when you look at what's really happened, is the first thing is that we broke the trend line that was rising from the September low. And then after we broke and went sideways, we've actually moved higher. Now, since you've gone to a higher high, the trend line itself, the break itself is less relevant, but the doji patterns are still showing that loss of momentum. The second thing is that this loss of momentum reflects more in stocks. So you actually have weakness in the broad market. The advanced decline ratios have actually been falling for the last several days, and that is reflected more in the sectoral indices. So just a couple of days ago, I noted that day before, yesterday night, in fact, I just scanned through the indices and I found that so many of them have either broken the rising lines, trend lines from the September lows. They've also gone below the 20-day average, some of them even the 40-day average. So there have been meaningful breaks in whether you look at the auto index, materials index, capital goods, consumer discretionary, power sector, and so on and so forth. You find so many sectors that have actually broken down below their averages already. Now, whether that's a lead indication or whether it's just a rotation within the market, we'll come to know. But the mid-cap index itself has stalled just at the point where, if you take a trend line from the high of 2018, the BSE mid-cap index just came close to that and is close to kissing that line, or it's kissed it and it's just, hovering around there. So the question is, what are you really going to get here? Are we now set up for a further breakout, or are we going to roll over? And that's the question we'll try to answer, I think, in the next week or so as we head into expiration, because from September I had actually turned bullish, and I thought that sentiment was so negative because of the short position that FIs had also built up. Plus, if you look at the way puts were trading relative to calls, various data points were showing that sentiment had really turned into an extreme negative, and then we were recovering from there. But despite this recovery, one thing which has surprised me is that a lot of negative sentiment continues to float in the market. People are still talking about weakness in growth, doomsday scenarios, and so on, even though a lot of measures were taken in the interim. And that's surprising, because previously, whenever you came to the 12,000 mark or came close to it, whenever there were rallies of 1,000 points or more in the Nifty, typically you would have moved from a sense of negativity to optimism. You saw that even into the election rally when you hit 12,100 in May of this year. But this time around, you're really not seeing that kind of optimism in the market. So in fact, yesterday, I think there were these two charts tweeted by an economist, Udit Rar, who follow on Twitter, and both of them showing that one of them was a business confidence survey that's really breaking down below a range that it was in for this entire period from 2013 to 17, and it's actually gone below that range, which is quite surprising, because now the next major swing low is only when you were at the 2008 low. So my sense that sentiment is getting bad is true, but I thought you were at those kind of lows. You're not there yet, but you're definitely gone into that range. So now, of course, you can say that sentiment measures like these are lead lag. It may be reflecting the sentiment that was there a month ago. It may not be current, but the point is, are we really turning in terms of sentiment? Because if the markets have started to recover, why don't we have that? And it's broadly because the recovery in mid caps has not been broad based, and like I said, recently we have again started to seeing selling in a lot of the indices or stocks in particular sectors which are not able to hold up. Even though the main indices are holding up mainly on the back of a few stocks. Like today, the biggest mover was Reliance Industries. It broke past the trend line of all its previous highs at 1495 and stretched a bit. It was one of the wave counts I had at the start of the month that was indicating if the fifth is equal to the first, then you come closer to 1620. And I was wondering whether 1495 gets surpassed because the Nifty had already lost momentum, but it did. And so whenever you get Reliance outperforming or underperforming the market cycle, it ends up being an indicator of market strength or weakness. So it's a quite a good one to watch. I mean, I've previously tracked Reliance underperformance cycles where whenever the stock underperforms for a period of time by a certain degree, when you look at the relative strength chart, then you would actually get a bottom formation in the market, and then it would head up from there. But similarly, you also get significant outperformance. You can see that at the peaks of 2008. You can see it even in 2000, where Reliance ends up doing better than the rest of the market in the final stages of a move. So we see both kind of affairs, and we're actually seeing some of that in the last couple of days, where RIL is actually heading up to new all-time highs, when the main market itself is still below that. So pretty interesting that you're being driven only by one index. Now you had end of the day some news flows. I don't know whether negative or positive, because some of it was already in the background. The divestments were already announced that they were coming. They just got cleared by cabinet. The other one is that you got a 2-year moratorium for the telecom companies to pay back their dues. Now, of course, their dues have already been announced and written off in the current quarter. What you would have thought is there would be some reduction in the amount to make profitability look better, but a moratorium simply means that yes, you don't pay it today, you pay it tomorrow, and then when tomorrow comes, maybe they'll try to spread it over a period of time rather than force them to pay it all at once. But that said, if you're expecting it to be there to be a write back, that some of these losses would get written back because they would get some freedom and some maybe reduction in the fees, then that's probably still not coming, at least at this stage. If it comes later, we don't know, but right now the announcement is that you have to pay it, you just get time to pay it back. So in that sense, I don't know whether it should be great news or not. And the third one, which is actually negative, is that Yes Bank announcing a deviation from its in its NP announcements for 2019 by almost over 3,000 or 3,200 crores odd, and that means that that's additional loss that needs to be provided for. So you have this mix of news, and then why didn't they really announce this before if that's the case? I also need to look at it. I think I just read through some headlines again on Twitter, but if that is the case, that these are new losses and they have to be written off, that means they were actually not announced earlier, or what is the process by which these losses really get recognized? It raises a lot of questions for people to look into, for RBI itself to look into. But those, I think, were some of the main issues of the day. Apart from that, you have a move that is, getting a little cocky, which is the dollar index itself. I think 2 months ago, I said the dollar index is topping out. It had formed an ending diagonal. It sold off from there to the 61% mark, and then it bounced back again to the 61% mark of the fall that we actually saw. So you have two key retracement levels that are being tested. The question is, which side of this are you going to break out? Now, I've always spoken about the divergence between what happens to the dollar index itself and what happens to emerging market currencies or developing market currencies relative to the developed market currencies. They sometimes can deviate from each other, and I thought that would happen. And a sense of that is becoming a little clear, I think, in the last week or so, where the Chilean peso has fallen to a new low. You have the Brazilian real going past the last 2 months, lows. And that means the USD going up against these currencies. So if you look at the USD BRL, it would be making a new high. The USD CLP is made much higher highs. And the USD INR itself is now coming very, very close to its previous swing highs at 72, 50 or 40 where it was. So it's gotten past the 72 mark or close to the 72 mark. Moves up a little more, 10, 20, 30 paisa, and it will be past those highs, and that means it will have started another swing high. So you're seeing dollar strength across the board against these currencies. Where you're not seeing it yet is probably in the DXY itself, because it had pulled back. But it was up earlier today, so I wonder whether that's a change in trend, or that's an extension to the earlier trend, or whether the reversal that I thought was happening earlier is still on. So I think I'm questioning these theses, similar to what I'm questioning in terms of Nifty, where I thought it was starting a larger move, but the way sentiment is built up and the weakness in the internals is really not reflecting the runaway move that it should have. And so this is a point at which we sit back and start questioning the underlying thesis and then see where it's headed further from here and then position ourselves accordingly. So I think we've reached that point where we need to take those calls, and I think I'll be posting my updates on each of them, highlighting what my latest note is. But some of the lead indications that we got in the last week were a sudden breakdown, I think, in lead prices that were having actually a good rally. That was the first commodity to sell off. The second one was zinc. It actually almost broke the rising trend line of its three-wave advance so far. So in that sense, it started looking corrective. Same happened with copper, happened with oil. Even though oil is up today, it had broken below its rising channel, a completely overlapping structure. No, so what all these weakness in commodities means that if you had a dollar downtrend, then this weakness comes on the back of probably some strengthening. Apart from that, you have the Aramco IPO going on. That's only reason to believe that oil might still attempt to make a higher high till the IPO is complete, which I think runs somewhere into maybe the first week of December, if I'm not wrong. But till it is on, you'd think that oil prices, which are the underlying support for that, would hold. But last night you actually got a break of a trend line in oil, so that makes me wonder whether it's headed up anymore. Maybe it's just pausing before it heads lower. So it's complicated. You have a breakdown in metals, which is again reflecting the strength of the dollar, which is reflecting more on the emerging market currencies or the Asian currencies than many, or the Brazil, like I said, a lot of the EM currencies all over again. So that's to be watched out for. And among that is the Chinese yuan. That's the big one, and that one's also retraced 61% of its previous rally and is holding those levels, and that then shifts the entire gear to thinking, apart from just the growth and dollar commodity options, that what's happening on the trade side. Because you would have thought that once you get a trade deal, the dollar starts weakening and the CNY weakness goes away because you come to some agreement in terms of currency manipulation, one of the issues that Donald Trump keeps raising. But the chart itself shows you've taken support there and the CNY might start weakening from here. And I wonder if that's going to be on the back of more fear around this deal, that the yuan would actually weaken, or maybe it's just what the Chinese want to do to get things moving. But if the US doesn't take it well, so we don't know how this is headed. Every day there's a positive or negative news flow related to this. No one really has a clue whether it's going to end well. So the only thing we can actually do is watch the currency markets for some kind of a lead indication to that happening. And right now the indication is shifted back to potential dollar strength. So that's all I think I have for you today on this update, with one last pointer. The S&P index, it's gone back to touch the trend line of all the previous highs, and this is happening at a time when the VIX has gone back to the previous lows. But this time when the VIX has gone back to the previous lows compared to 2018, the short positions in VIX futures is gone to one more new all-time record, which means the previous all-time record, which was in 2018, at that time when the US market peaked. Now you're at an even bigger record in terms of people being short on VIX futures. It's an interesting data point, and that's what I'll leave you with. Thank you.